Hey everyone, this is Neha from Forex. Welcome back to my YouTube channel. If you're new here, do subscribe and hit the like button, and if you're already a subscriber, welcome back. So a lot of you have asked me how long did you trade it on demo, how much time did you took to become a consistent and a profitable trader, what are the best practices that you follow and you suggest us to follow to become profitable. So in this video I'm gonna tell you 10 best practices that have helped me to become a profitable trader, and I can bet if you follow these 10 tips you're gonna be profitable in no time. So starting with the first one, before executing on any specific trade idea, what I do is I calculate the stop range. For suppose here, if I'm looking for sells below here, what I'm gonna do is I'll calculate where am I going to put my stops. Firstly, I'm gonna decide the range of the stop. So for suppose here's the range, this is around 12 or 13 pips. So in this example, if I want to take sells below this support over here, and I'll calculate the risk, which is around 30 pips, and now I'll calculate the take profit, the minimum profit, or the TP1, which is around 17 pips over here. And if I go like over here, this is around 23 pips. So here the trade seems quite appropriate, because here in this scenario it will be a 1-to-1 or 1-to-2 risk to reward ratio trade, which is fine for me. So but if we look here in this example, for suppose I'm planning to take sells below here, what will be my risk? Firstly, I'll calculate the stop. This will be around 47 pips, which is really huge, because I don't know if this huge move will come or not, if my stops will get hit or not. So 47 pip, the stop is gonna be big, so I'm not gonna enter over here. Again, let's do another example. Like here, for suppose I'm looking for sells below this support area, I'll calculate the stop around over here above this candle or above the current candle, which will be like here. If I put my stops above here around 14 or 15 pips, and I target this range as my initial target, which is around 58 pips, so this is a quality trade that I will definitely want to enter. And once the price breaks below this area, I'll enter sells, keeping stops above the current candle. Yeah, so this is the great trade idea that I will want to take every time, because the risk to reward is high, and this is the perfect trade. So rule number one is to calculate the stop loss range in order to set the risk for every trade, and to decide the range that you are targeting is enough to risk your money or not. And if the stop is too high as compared to the target, you are not going to enter simply. This will save a lot of your money. So moving on to number two. Number two is do not enter whenever you are in a dilemma. Let's take a look over here to make it more clear. For suppose over here, yeah, this is a support area. Over here you guys can see this is a fake out, but before it happened as a fake out, but before the fake out actually formed, nobody knew it's going to be a fake out, because this is a key level. The price broke the key level, the candle closed bearish, and you guys say, okay, it's going to drop more, it's melting, and I must take sells. But with this next candle turning bullish, you get into the dilemma whether it's going down or it's gonna go bullish. So whenever you're in a dilemma, wait for a confirmation and do not enter. So if I would have entered sells over here, my stops above here, because I was in a dilemma, I would have lost a lot of money. So instead of executing, instead of taking entries in the dilemma, just wait for a confirmation. Like in this example, the confirmation for buys were here, this bullish candle, the candle closing bullish, and you could have entered buys when this candle closed bullish and the next candle made a lower wick, keeping a stop below the wick and target right here, the next resistance or this resistance over here. This was the perfect trade, because as we talked in the first rule, that was to calculate the range of stop is around 8 pips. It's not that much, and the target is, if we look here, this is around 22 pips, and if we set over here, this is around 45 or 47 pips. This is the perfect example if you follow both the rules. So never enter whenever you are in a dilemma, and wait for a strong confirmation, or just leave the charts. The third rule that I follow is do not enter in a low volume session. So I trade only when there's high volume in the market. So when there's high volume in the market, you're not going to trap into ranges like these, and you will instantly get the results. Either if your prediction is right, if your breakdown is right, the trade will work out, and if it is not, you'll get out of it easily by managing your risk. But if you get into trades, if you get into ranges like these, you will remain trapped. You gotta avoid the ranges and only trade in high volume sessions. The high volume sessions are like in the pre-London, in London Open, and in pre-New York, New York Open. Yeah. The fourth rule, which is part of my strategy, that is the first step that I do whenever I open up charts, whenever I am into taking any trades, I'm trading any session. What I do is I open up higher time frames, I do multiple time frame analysis and trade accordingly. So like in this chart, let's do, first of all, I switch to the daily time frame and look at the higher time frame, what's happening on the daily. So over here, this is the daily time frame. Yeah, if you look here, today's market is closed, but if I were here, this was the daily candle, it is clearly bearish. So one thing that comes in my mind is like, okay, the bears will be strong for today because the daily candle is bearish and overall the trend is bearish as well. After that, I'll turn to the 4-hour time frame. Look here, the previous 4-hour candle closed strong bearish, confirming that the trend is bearish, and there's a high probability next 4-hour will turn bearish. So my anticipation for sales is getting stronger as I'm turning to lower time frames. I'll switch to 30-minute time frame or even 1 hour. So, yeah, the game begins here. At the 1 hour, I'll draw my ranges like here, roughly, what's that? This is the resistance, this is the support formation, and if we break below the support level, I'm going to enter sales impulsively because I know that the higher time frame trend is bearish, and I will not wait for any wick formation or any strong confirmation to execute on sales when there's high volume and when the risk on the trade is lower following the 30-minute time frame for execution. This is how I do it. So over here, what I will do is I'll calculate the range for stop. Like here, this is around 8 pips. So what I will do is when the next candle will break the lows of the previous candle, I'll enter sells right here. Wait. Keeping my stops over here. Target, this will be my first target, the support level. This will be my second target because the market has already come to this point, so there's a high probability the price will retest this area, and if you break below this, we can continue more to the downside. Number 5 is formulating your own strategy and sticking to that. You need to understand that a strategy is very important and you gotta stick to that. What a lot of the newbies do is they watch random videos on YouTube and try to follow each and everything they watch. and as a result they lose their money. They watch like a bunch of indicators, a mix up of them, and apply them on other concepts, like they match and mix high time frames, they use oscillators, and they use EMAs. They use EMAs along with trend lines, along with oscillators, along with RSI, and mix and match each and everything, and they fill up their charts with these indicators and try to trade on these, and as a result they lose a lot of money. So stop doing this, because trading doesn't work like that. You're never going to become a profitable trader if you do this. The number one thing is to formulate a strategy and understand what actually works for you. Like, I'm a breakout trader. I only trade breakouts, even though I know most of the reversal patterns, I know the reversal candlestick confirmation, but the breakouts works for me most of the times, and I only stick to that. I don't try to trade reversals, even though I can trade, but I stick to my strategy because it works for me and I'm okay with that. So you gotta do the same thing. You have to find that what actually works for you. If you can become a reversal trader, if you are really expert at pinpointing the reversals or the sniper entries, just go for that. Don't follow others, and don't try to follow each and everything that you think is gonna work. Just stick to one thing, and that's it. It's enough to make you a profitable trader, believe me. Number 6 is using higher time frame breakouts, because I'm a breakout trader, as I've told you earlier. So what I do is I follow the high time frame breakouts, because that is more confirming and that indicates more strength in the market. Just like over here, just forget about this move. What I would do is firstly mark the level, support and resistance, and here you can see this is the break of a key level at a 4-hour time frame. Most of the candles have failed to break below this support level, so I will enter impulsively when the price breaks below this level in a high volume session. Let me count the pips. This is around more than 100 pips. Now I'm not going to manage risk or execute on this time frame. I'll just mark the level, this level, as a 4-hour or our key support, and turn to a 30-minute time frame, which is of course my execution time frame, and I will look for where I can enter. Like, this was the entry over here. Wait a minute. Yeah. So when price broke below this, my stops would have been like over here, because this is the key resistance. This is around, let me just, no, this is still a big stop loss. So I go to 15-minute stop is still big. So in this situation, if I know that the key support is very strong, it is a high time frame support, the trend is bearish, I can set stops in between these candles, like over here, as per my risk capacity. So my stop will be around 20, or even and this is enough. This will be my stop, and I'm going to target based on 4-hour time frame. Over here, this was the next support level which I will target for these cells. Over here. So this is a perfect trade, entered on high time frame, around 180 pips in a single trade idea. And you can see that when the key support is broken, even the 15-minute candle is huge enough to fill up the range. I mean, these two 15-minute candles filled up the 180 pips range. You guys can anticipate how much volume and key levels, high time frame key levels, are important, and they play out really well. The next thing is very important, that is risk management. Soon after I started focusing on risk management, I followed strict risk management rules that are of course made by me, because there are no hard and fast rules for the risk management. It really depends on you how you manage the risk. So I follow my risk management rules, and believe me, the results are awesome, and I'm losing less money and I'm gaining more, because what I do is I secure partials in between, just like here when the market is giving me, like, this is huge, 25 pips over here. When the market reaches here, I'll just churn to break even and secure my position. So over here, so if the price reverses from here, if it turns out into a fake out, I'm still in profits, because I have secured partial, because I have secured my profits. So I don't worry about the loss anymore, and this is my full target and I am worryless. That's it. So risk management is very important. Whenever you are in a losing trade, whenever you are in a winning trade, risk management is very crucial, and you gotta understand that as soon as possible, because what most of the new traders do is they move their stops anticipating that the trade might work, just like here. If they are in buys over here, anticipating that this candle has turned bullish and the next candle will turn bullish anyways, targeting this range, and they keep moving their stops like here, or either they just let the price hit their stops, which is wrong. As we secured partials in a winning trade, we have to close positions in a losing trade as well. So when this candle closed bearish, you could have closed entire positions or close at least 50 or 80% of your trades to reduce the losses in this particular trade, because market is open for 24/7, and there are so many opportunities that you can grab in upcoming days or in any other session. So it's better to manage the risk than to lose more money in a losing trade. Yeah. Another simple yet effective rule that I've been following since a long time is I only focus on 1 or 2 or up to 3 trades in a day, and even if these trades are going in losses, if I'm winning, I'm not going to trade any other opportunity. Even though I'm sure that this is going to work, I'm not gonna enter that, because I'm done for the day. I have money in my pockets, I have secured my partials, I'm profitable for the day. That's it. I am going to secure the profits and come next day and do the same things again. No trades for the day. This simple rule helped me to control overtrading, to control FOMO, or to enter randomly, and it also has helped me to become a consistent trader, because when I know I'm only going to take 1 or 2 trades in this day, I'll only focus on taking quality trades in high volume session with high candlestick confirmation and high time frame confluence. This is how it works, and this is how it saves your money. Try this. It will save your money and time as well, because when you are taking 1 or 2 trades in a day, it will save your time. You take 1 trade, you're done for the day. That's it. You're not going to look at charts anymore. Yeah. The last thing is to journal your trades and do back testing in the weekends, or when you're done for the day, just open up the charts of the previous trades and look how could you have avoided the losses, how could you have entered earlier, or where was the better entry, where was the better exit. And this way, when the same setups that you have traded before appears in the near future, you will trade them more efficiently and you will avoid the losses as well, and you'll become profitable in the end. Yeah. One thing I must tell you guys is that there's no hard and fast rule in trading. Everything depends upon your mindset. So control your mindset and look what actually works for you. If scalping works for you, go for that. If high time frames work for you, go for that. If you see that most of the trades that you have taken are breakouts trades and that have worked for you, just go for that. Don't look for any other thing that is not working for you and that you have nothing to do with that. Just follow what is working for you, and that's it. Yeah, with that being said, keep trading, keep learning. Thanks for watching, and don't forget to hit the like button and subscribe to our channel.